And welcome. This is Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we put you in front of where the action is in the broader markets. And as always, with an eye toward helping you develop a solid plan going into not only next week, but beyond. So let's take a look at what we're going to be covering today. As usual, we will go ahead and take a look at the markets. Where are we precisely? What can we anticipate by looking at those charts going forward? Also, we are seeing add-on plays to one particular hot industry group. We're going to get into that. Also newer areas that are coming into play. We're in a kind of a drifty period, for lack of a better word. The themes are ebbing and flowing, but there are newer areas coming on strong. So we're going to drill down beyond that. Also, what to look out for going into earnings. Earnings seasons has begun. A bit of a mixed picture, but overall constructive. So what to look out for as we continue into this first quarter earnings season. And then, of course, base breakouts and those stocks that are very close to a base breakout. As many of you know, my work comes from my many years at William O'Neill and Company, founder of IBD. So I'm all about those base breakouts. Let's take a look. I want to share with you some of the more impactful headline news as it relates to the economy that did in fact impact the markets. We did see earlier in the week consumer prices jumped much higher in March. A lot of that was due to an increase in gasoline prices, but there was also additional impact of consumer prices elsewhere, so signs of potential inflation. We also did see retail sales. They post their largest gain in 10 months, attributable to that stimulus check, and individuals, they actually have a name for it, revenge spending. So that really helped select areas of retail. And then we did see a nice drop in weekly jobless claims. So we're certainly on track as far as the recovery and some of the areas that are impacting that we're going to get into. Consumer sentiment hit a one-year high, so lots of certainly positive, much more than we've seen certainly in the past. New home sales surged in March. This continues to be a strong area of the economy, and we'll talk about that. And industrial production did come in with a solid number. However, it was less than anticipated. So mixed signals there. But I think as we drill down, I'll share with you more impactful news as it relates to the markets. So let's not waste a minute. Take a look here at the S&P 500. We're looking at a daily price chart, and we were up almost 1.5% on the week, but we are also at yet another new high in price. One thing I did point out last week, and it bears repeating this week, is that RSI is up here in an overbought position. So you want to keep that certainly in mind. It's just something to have because oftentimes after being in that overbought position, we certainly can experience a little bit of a pullback. Stochastics are positive, also up here in overbought position as well. But for the most part, the S&P broader markets are in a nice confirmed uptrend here. So let's look beyond the markets, drill down into those S&P 500 sectors, and we are looking at a 2-month daily price chart of the 11 sectors in the S&P 500. And then I like to add this RSI, this relative strength indicator, sort this list in descending order. We're all about uncovering where the strength is in the markets relatively, with an eye toward, of course, capitalizing on that strength. So let's take a look. I mentioned in the beginning we'd be talking about newer areas that are coming into the markets, and utilities, interestingly, continue to march to now new highs. This is an area It's varied as far as the participation. A lot of it is recovery play related as far as electricity, but also infrastructure. And Biden's infrastructure plan is impacting areas of the utility. It's not defensive, it is more from a recovery and growth standpoint. Next up, healthcare. I think I touched on this last week, but it definitely bears a closer look this week. Nice base breakout and a couple of areas here that are driving healthcare. One, certainly some of these larger pharmaceuticals. And then we'll take a look in our next slide at another area that is very nicely impacting healthcare stocks. And we like to see broadening out, newer areas participate. However, that said, as we take a look at this listing and drill down, these are some of your weaker areas, lower quartile. And unfortunately, technology is just resting here, and it is indicative of a mixed area as far as tech, what's working and what's not. And we can see communication services, which had a stellar week last week, was the weakest sector this week. A lot of those internet related stocks that had really done quite well kind of languishing a bit this week, and then energy continuing to suffer. This is going to be, let's take a look, because had a huge run up. It's still the top performer year to date and by a pretty wide margin. So this pullback is all about consolidating after this big run up. So I'm on the prowl for a downtrend reversal to take us for another leg up. So let's go ahead and drill down beyond these sectors and go ahead and take a look at the underlying industry groups. My work, I'm going to be centered and focused a lot around some of the growthier areas and areas of the market that tend to move faster and higher. So what I've done here is provided this 2-month daily price chart view of not only the broader markets, but also we're looking at software, semiconductors. This IBB is the NASDAQ biotech industry grouping. We're going to take a look at yields and the price of oil. Again, RSI here, so we can see that relative outperformance. I'm going to go ahead and update it here. And we can see that each of the broader market indices are sitting up here in the forefront. The S&P, the Dow hitting a new high, the NASDAQ up here. But let's take a look at some of the underlying groups that are also up here in the forefront. And this is IGV, a kind of widely used technology software ETF. And we can see software had a very big run out of that bear market into the beginning of this year. They did falter as interest rates began to rise. And then also as we saw that this particular area where higher multiple stocks really got hit quite hard, but they're reversing quite nicely. So this is constructive. And then from here, I did want to share with you the fact that gold stocks are trying to revitalize here. We had a nice double bottom formation. Then from here, it's beginning to potentially reverse this downtrend for you gold bugs out there. Keep an eye on that. And then crude oil prices had a big pop this week. We can see they're up back in that $67 range, very constructive. So we're going to be on the lookout for that energy group and those individual stocks to take note of that increase in oil prices. And then an area that is actually showing as declining, but this is actually constructive for the markets, is the yield on the 10-year Treasury. So we can see it is pulling back a bit here, down to 1.57. A couple of good characteristics here: lower interest rates, even more positive news for the housing market, but also that high interest rate environment was what really catapulted a decline in those higher multiple tech stocks. So despite seeing continued strength in the economy, we're not seeing that same reaction where rates were spiking upward. So this actually is generally constructive for the markets. So we've now seen the broader markets, the sectors, some of these sub-industry groupings. From here, let's go ahead and drill down. I want to share with you a lot of different dynamics, cross currents that are taking place in the markets. But what I want to go ahead and begin with is sharing with you some of these companies that are seeing upgrades to their earnings going into their report. So in other words, analysts are revising their outlooks for these companies upward. And I did mention this before because oftentimes when these analysts who are meeting with management, when they are revising upward, going into earnings, generally they're not going to be putting their neck on the line unless they have some insight, some instinctive, they are meeting with management and speaking with them. So it is generally a bullish sign to see estimates revised for a company going into revised upward, going into their numbers. So first up here is Comcast. We're looking at a daily price chart. They did get an upgrade today to outperform a $61 price target. It's trading at 55. But let's look at the stock technically, and we can see that Comcast did hit a new high here in the end of March. But at that time, we also got into an overbought position on that RSI. And also your MACD got up here quite high. So we can just go back historically to this December period, same phenom, high overbought, high price, overbought conditions, and the stock very naturally consolidates. And while it may be painful if you own the stock, it's just really an ideal setup once that consolidation phase reverses. The stock has now broken back above its 10 and 21-day simple moving average. We can see this RSI just now trending upward, and this MACD just now having that black line up through the red, indicating this downtrend has is on its way to reversing. Comcast also offers a nice yield, 1.8% for those of you seeking that. And I did notice a lot of that this week, where some of these stocks that are picking up, I'll share a few more here, that have nice high yields. Next up is Cisco Systems. This stock did get an upgrade today as well. Just going to take a minute here and mark this up, because what we are seeing is a nice base breakout out of a flat base. And we can also see that the stock had this gap up in price on big volume. So when you get this gap up, it causes a base breakout on big volume, generally can be very bullish. The company actually, as far as that upgrade, they're talking about IT spending increasing among corporations as offices begin to reopen. Cisco is due to report their earnings over the next 2 weeks. And next up, another company that got a nice upgrade going into their report is actually an oil and gas. This is Marathon Petroleum, MPC. And what drew me to this chart is this nice break above the moving averages, nice volume here. RSI just trended upward. I would like to see the group overall move into bullish territory, but it is worth noting MPC has a 4.2% yield. And again, they are also due to report coming up here shortly. OSK is another company. They're due to report in about 12 days, and it is a commercial vehicle, an industrial stock. Not seeing a whole lot of vibrancy in these outside momentum indicators. More to the point is that it did break out of that flat base, 1.1% yielder. Let's see if I can share with you one last name, because other areas that I want to get to. This is Simon Property, SPG, and among other areas, they did get, it is a mall REIT, 4.5% yielder. You can see this gap up here, big volume, RSI is positive, and this is all about that recovery play, that move, the move that we are seeing in select retailers as individuals are putting their stimulus checks to work, and then also going back to work, which is improving the retail landscape. Another one last one here is another retail shopping center REIT, 3.1% yielder. It did get an upgrade, and it had that nice gap up on big volume. So I'm going to take a brief break here. When we get back, we have lots more to cover. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. From here, I want to go ahead and share with you some of these base breakouts that have taken place this week. And in line with that, it will fall into that theme as far as add-on plays to a very hot area. But first up here, I did want to point out outside of that theme is a stock that had a big gap up today, 13%. This is Lattice Semiconductor, LSCC. And the reason for that is because they were added to the S&P 500 mid-cap index. So oftentimes you will see that big gap up on the news. So I wanted to provide you with precedence, another semiconductor stock that did get added to the S&P 500 a few weeks ago. And this is NXP Semiconductor, NXPI, not quite as dramatic, but it did have a gap up. Look at this huge volume as it got added to the S&P 500. And there was a subsequent 2-day add-on rally that took place. But since then, it's really just kind of resigned itself and is trading much more in line with the broader market. So I certainly wanted to point that out. From here, we can take a look at other breakouts that are taking place. But before we do that, let me just share with you, if I can get to that grouping here. But for the most part, housing stocks have been the top performers this week. Let's go ahead. It does bear a closer look because it is an area that has been doing well, but it is continuing to do well. So I'm using this sector summary in StockCharts.com. From that view, as far as the 11 sectors here, we can then get into those sub-industry groupings. Take a look. Home construction up 3% on the day, all about those housing numbers that came out, exceptional numbers. Yeah, so not quite as vibrant on the 1 week, but we can see that these housing stocks are actually doing quite well, home construction. And then from there, you can see some of your bigger movers. Those of you that subscribe to my MEM Edge report, you will know, be familiar with this because we do have 2 of the top names in this group. But from here, what I also wanted to point out to you in that consumer, actually, we are looking at consumer discretionary. I just want to make sure. We can see some of the other areas, and I talked about this add-on play to home construction, home improvement retailers, durable household products. People are furnishing these new homes. Furnishings also up here in the forefront as far as doing quite well. I'm going to scoot on over to one other area that is really benefiting from this increased demand in low supply housing. So I just popped over here into industrial sector. So we're going to be seeing a lot of building materials companies, as well as even heavy construction as well. All of these are companies that are supporting that housing move. So it certainly is a dominant fixture and part of certainly the stocks I'm going to be looking at as far as base breakouts and close to those base breakouts. So let's get started. First up, we have a stock WMS. I'm going to see if I can get a bigger picture here on this chart, and then also take a look at what's called the full quote. We do have that up here. So this is Advanced Drainage Systems. It's an $8.3 billion stock, and WMS is the ticker symbol. And we can see that it had a nice base breakout today. I like this high volume characteristics. We also have our outside momentum indicators trending upward. It is getting close to overbought, but we can see it's been able to retain a presence up there and still trade higher. Next up is another stock that had a nice base breakout. It's Installed Building Products, $4 billion. And again, we had that nice base breakout taking place here. Let's go ahead and draw a little chart here, and we can see that it did break out today. Nice volume characteristics. Again, outside momentum indicators are constructive. So that is another name that I did want to share with you. Next up is GMS, and these aren't going to be well known. They are generally mid-cap stocks for the most part. This actually is a $2 billion, so a little bit smaller, but it is a building materials company. GMS Inc. is the name. They do a lot as far as interior residential building products. Another gap up, base breakout, big volume. So we can see where when a particular industry group does well, oftentimes you don't need to search too far beyond that to see that a lot of the companies that provide products to that industry are also doing quite well. This is Top Build BLD, another base breakout into an uptrend. And once these uptrends get going, I tend to like to add a 5-day simple moving average, this blue line. Now you can see, so that when the stock pulls back to that shorter term, oftentimes that can be an ideal buy point. And from here, I did want to share other stocks that are add-on plays to that building concept. And as far as not only new housing, but also as individual purchase existing homes, they are going to be refurbishing them as well as their existing residences. This is Floor and Decor, FND. Hit a new high last week, pulled back very orderly, and now is entering back into an uptrend. FND on the daily. Lumber Liquidator. Now this one is a little even more interesting in the concept that it is potentially just now reversing its downtrend. It's broken back above these shorter term moving averages just as your MACD is turning positive here, positive RSI. I would need to see it trade a little more consistently above this 50-day simple moving average to really have conviction. And we want to be on the prowl for this, of course, type of advance as it reverses its downtrend. I do understand that lumber prices are super high, so that may create headwinds. There's been a shortage as far as lumber products. And then last up, we can take a look at Restoration Hardware. This is a high-end home decoration, or certainly interior products company. RH breaking out of this 1-month flat base on volume. So let's move on, because I do have a number of stocks, certainly in other areas, that are close to breaking out. They're not quite there yet, but there are dynamics that could easily propel them higher. First up, we're looking at a regional bank, First Republic out of San Francisco, ticker symbol FRC. And this particular company just reported their earnings. So hence, we did get this nice move here over the last 2 days that is taking us right to the cusp here of a base breakout. They did come in with earnings 49% year-over-year growth, 15% ahead of estimates. So we can see this MACD just poised to turn positive. Black line up through the red. We are poised to break out of this base, nice volume characteristics, and outside upward momentum indicators. Another company very close to a base breakout is in technology. I haven't been addressing tech a whole lot here today, but this is Zebra Technologies, ZBRA, electronic equipment company, just now poised to break out of a base. They do a lot with scanners and other products. We can see that this MACD is still relatively early in its downtrend reversal phase. So if we could see a nice base breakout on volume, could be quite interesting. That we're seeing earnings being revised upward. They are due to report in about 3 weeks, and they got an upgrade with a $540 price target. It's currently trading at $513 and a half. Another name here that we can take a quick look at is kind of a little quiet here, but it is on the cusp of a nice base breakout. CDNS subscribers to MEM Edge will be familiar with this company. They do provide software to many areas. One more vibrant recently is software that helps semiconductor companies design and manufacture the much needed semiconductor chips. Another company that's close to a base breakout here, actually, let me go here. It is going to be another add-on housing play. So I think you're going to see a theme here. Trex, these guys are all about those helping put on, they're in the back of your house, decks. But a couple of constructive characteristics here. We do see a double bottom where your lows are occurring at a higher level. That's quite positive. Also, we are, again, very close to that base breakout, and we can see that your other outside momentum indicators are quite dynamic. And then a couple of other names that I can share with you here. MLM is more of an infrastructure play. This is Martin Marietta. They do create, they actually have products that assist as far as gravel and so forth. Not really overly dynamic, but it is in a nice confirmed uptrend, uptrending here that looks quite constructive. And let's take a look, and I'm trying to recall if I am repeating myself, but this is IPB, Installed Building Products. We may have reviewed this earlier, but I did want to mention that they have earnings estimates, 34% for this year, and then 18% next year. But the bigger news there is that analysts are revising their estimates higher for this particular company. And sure, we do still have time because I also wanted to share with you, I mentioned to you that gold stocks are starting to potentially pick up, and among them, Freeport McMoran FCX is one of the better names poised here for a base breakout. So we can see that your momentum down here just poised to turn positive, looking quite constructive there. And then one other area that I wanted to mention, we talked about healthcare stocks and some of these larger pharmaceutical companies that are really coming into their own. We can see here that Pfizer had this nice peak, of course, one of the major suppliers of the COVID-19 vaccine, but they also have a lot in the way of products elsewhere in their pipeline that are starting to come out as far as positive phase 3 trials and so forth. And we can see the stock has reversed that downtrend and is in a nice uptrend. One last name here is Bristol Myers, poised for a base breakout. This has been a nice winner for MEM Edge report. And speaking of that, for those of you, go ahead and take advantage of my special for a 4-week trial. You can use the link below and take advantage of that. Also, I will be doing a webinar next week all about how to get in front of these big winning stocks. I'm going to go ahead and leave a link down below so you can sign up for that as well. And I'm going to leave it at that. For those of you, have a great weekend, and I will see you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.